In this video, traders, we're going to look at 8 day trading mistakes that will cost you dearly. Stay tuned. Hey traders, hey very well, welcome to. So if you're a newish trader, newish trader just starting out, these 8 mistakes, especially if you're a day trader, and very much so if you're a day trader, will cost you probably your account. So if you can avoid these, you are on the right path. Let's go. Number 1, poor risk reward ratio for your trades. You need to have at least a 2-to-1, a 3-to-1, a 4-to-1, plus if you can, risk to reward ratio. What does that mean? You're risking 10 pips to make 20, to make 30, to make 40. You don't want to be risking 10 pips to make 5. You don't really want to be risking 10 pips to make 10. You can do that if you've got a high expectancy on your strategy, but when you're starting out, it's better to just start out with the simple risk reward. It's easy to calculate, easy to understand. You can find the trades where that works out on a good starting point. Don't get lured into the trap of trying to trade more frequently, or more likely you get into a trap of, hey, I think it's really strong, I'm just going to take a quick 10 pips on this, it's going to just go 10 pips, and you end up losing 25 because you think 10 is too tight. That's a real dangerous trap to get into. So structure your trades, have a decent risk reward ratio, good starting point. Okay, number 2, not using a stop loss. Sounds simple, but if you're brand new to this, honestly, stop loss is imperative. Stick a stop loss in, even if you have it a little bit further away to start off with, then you ratchet it up as you decide how to place the trade. Just having something in there to limit your loss is essential, because as a new trader, the tendency is to hold on to the losers longer and not let the winners run. And over time, you're going to tip that round so that you run your winners longer and you cut your losers. But you need that safety net of a stop loss so you don't just completely wipe yourself out. Get your stop loss in wherever it may be. Just make it a habit. Putting the stop loss in, stop loss in. If you need to adjust it afterwards, then by all means. I used to have something that put my stop loss in automatically, and then I'd adjust it. It would be a wide stop, then I'll adjust it to where I thought it was relevant for the trade. Do something like that manually, automatic, whatever. But whatever you do, have that risk capped. All right, number 3. Adding to losers. The best traders in the world, and I mean billionaire traders in the world, say this. So, and I hear this from massive amounts of very successful traders. Do not add to your losing trades. I don't care what the guy on the forum says about scaling in and scaling down. I don't care about that for now. That is something you can do in a more advanced situation. When you've got a more advanced strategy and you're planning your scaling in, that's different. If you're planning it and you're saying, hey, I'm going to come in on this thing, that's different. But don't focus on that now. Don't try and overcomplicate things. Just make it a golden rule that you will not break, that you do not add to a losing trade ever. 2 years, 3 years, 4 years, 10 years down the line, when you've got a strategy that you want to do some more playing around with, by all means. But this will save you a heap of money. Number 4. No risk management. You must have a risk management plan in place. You must know how much you're going to risk per trade, finite monetary amount, $100, $500, $1,000, $50, doesn't matter, whatever it is. Then adjusting your position size to suit. Go and check out videos I've done on how to calculate a position size if you're a new trader. Knowing how much you're going to lose on per trade. Knowing how much maximum you're going to lose in a day. So that's multiplied by your maximum loser. If you only want to lose $300 a day and you're only taking 3 trades a day, your maximum loser's got to be 100. If it's $100 a day, you can't really have one trade. You get a receipt, or you've got to reduce your position size to make it $50 a day. Whatever. The order of magnitude doesn't really matter. The point is you've got some risk management, and then you need to extrapolate that for the week, the month, the year. What are you comfortable with losing? It's going to be your fee for learning, as long as you've got a plan in place for that. Number 5, going in too big. It should be a double O there. Going in too big on each trade. You don't want to be going all your chips in on every single trade. I know it's tempting. You might have opened an account with a small amount of money just to start off with, and you're like, well, there's no point in doing it. I'm going to make 50p. I'm going to make this or about the other. You want to kind of put some money in it. I get it, but it's so tempting to try and go all in on each trade, or nearly all in, using all your margin, all your money. That will almost guarantee you to be in the majority of people who lose, because you'll do that, you'll do that, you'll do that. Maybe you'll get away with it. Eventually you'll lose, it'll wipe you out, and you won't give yourself even chance to push ahead with the trading career. All right, number 6, guessing how news will move price. I see this quite often, guys. People are like, oh, this data is going to be great. You know, it doesn't matter. Even if it's bad, the market's going to go up. And you take a guess, you take a gamble, the thing then spikes down 50, stops you out, then rips up 200. Don't even get involved with data. I would recommend, if you're a new trader, get on your economic calendar and make sure you don't have a trade held over data. Make sure you're not even thinking of trading anywhere near data 1 hour before, 2 hours after, whatever. Just avoid it for now. Later on, you can get all advanced and clever and try and put strategies. That's fine, that's cool, that's great. But at the beginning, just steer clear of data, and specifically don't try and guess it or hold positions based on a whim. Okay, the final thing, guys, trading with no plan. You need a plan, even if it's the most basic plan in the world. Simple 1, 2, 3, 4, 5-step process. Just start something that you can build from. Doesn't need to be complicated, doesn't need to be a full folder of information. You can just have it on a small A5 sheet even, just how you're going to approach the market, and then you start to add to it as you start to learn and start to improve and start to progress. Okay guys, 8 day trading mistakes that will cost you, so really try and avoid these, and if you can, you've got a great chance of progressing to the next level. Take care, keep your risk managed, good trading, bye bye.